Fidelity European Trust captures the diversity and potential of Europe through top-ranking research and investment in high-quality Euro companies. Now, recently, Hardman Co published a report on the company entitled Continued Resilience in Difficult Markets. Joining me today to discuss the report is Hardman Co Analyst, Riccardo Bindi. Riccardo, good morning to you.
Morning.
Riccardo, what can you tell us about the note that you've just published?
Well, we thought as we approach the end of the calendar year, and despite the tough start, in this note, what we do is reiterate Fidelity European Trust's focus on stock picking and downside risk. We think this should reassure investors that Fidelity European Trust is continuing to add value to investors over the long term.
Does that mean then that you think Fidelity European Trust investment philosophy and long-term track record are actually worth revisiting?
Yes, absolutely. We touched on Fidelity European Trust's investment philosophy in our previous three notes, but we think it's always worth reminding readers of the Trust core tenets, namely that it is primarily a bottom-up process which seeks out companies that can grow dividends sustainably over a 3 to 5 year horizon. The managers look for attractive valuations, i.e. good quality at a reasonable price with low turnover and hence low transaction costs. It is a cautious strategy that focuses on managing downside risk, and the fund is always fully invested.
Sure, okay. What other issues do you touch on in the note?
Well, we touch on a few macro issues that have made a lot of headlines in the financial press in particular this year and have been a lot on investors' minds, namely energy prices, rising interest rates, and concerns about consumer expenditure and the luxury sector in particular. And we see how they have affected, if at all, Fidelity European Trust. We also briefly touch on a few other trust-specific topics such as share repurchases, portfolio turnover, and fees.
Sure. Okay. Have any of these macro issues had any effect on Fidelity European Trust?
Well, with regard to rising inflation and rising rates, which have been a major concern this year, Fidelity European Trust is overweight financials by over 5% and has had a few good contributors to performance with the likes of Bank Inter in Spain and Deutsche Börse in Germany. On the concerns about consumer expenditures in the luxury sector, the Trust has a 5.5% position in LVMH, which is also a top 10 position. LVMH, as you know, is one of the world's leading luxury and fashion groups and has shown great resilience with great results this year and has been a good performer relative to the index as well. As far as energy prices are concerned, I mean, these has obviously been a major concern, particularly since the beginning of the year after the Russian invasion of Ukraine. The weighting of the sector in Trust benchmark, the Trust is neutral weighted. Its biggest position in the sector is Total Energy, the French energy company, which is another stock that's performed very well this year. So overall, none of these big macro issues have really influenced the performance of Fidelity European Trust this year.
Sure. Now, you also mentioned fees and turnover. Are there any major changes there?
No, not really. But again, we thought it was worth reiterating what we have mentioned in some of the previous notes. Fees have been going down generally since 2016 and are very competitive versus the peer group. Turnover as well has historically been low and has averaged about 16% in the last 5 years. The largest holdings show remarkable consistency over the years, which is what we would expect from a long-term stock-picking fund. Fidelity European values the European Trust's strength over the years has been in generating alpha by picking good quality growth companies at a fair price, rather than churning lowly valued shares that may or may not re-rate, or following macro trends and engaging in market timing.
Sounds good. Okay. Talking to me today was Riccardo Bindi, Analyst at Hardman Co. Riccardo, thanks for joining DirectorsTalk today.
Thank you very much.